Trent Brandon Bradshaw Rogers Financial Partners, and Mind Your Money. Thank you for joining us for this market update. Today is January the 21st, 2025. Multiple things we're going to talk about today. Reallocations on our portfolio for the first quarter, which we've already taken care of. The second thing we're going to talk about, inauguration, new president, right?
Yeah,
right.
Big deal.
What should we expect maybe from that? The last part of it is we always talk about interest rates and the Fed and how we think it'll impact the portfolio in the year going forward. So we'll touch on that. All right, let's jump right in. Let's talk about reallocations on the portfolios and what our thoughts are for the first quarter right now and what we did in order to prepare for that and what we expect over the next 3 months. We had multiple rate decreases last year, roughly 1% sum over the year. So when that occurs, there's a lot of liquidity that flows back into the market. The market actually received it pretty well. We had a real stellar year for the S&P 500, the Dow, and the NASDAQ, so a great market year for that. But ultimately, coming into the first quarter, what we have found out is that the Federal Reserve, and we're talking about interest rates here, have probably backed off that a little bit. We were expecting another full point to be in play for reductions for this year. But what we're looking at now is maybe 1 to 2 rate cuts, which equates to 0.25% to 0.5%. Not near as dovish as we thought. It's coming in a little bit more hawkish from that standpoint. There are concerns about inflation ticking back up. So in the portfolios, we did make some adjustments to prepare for that, pretty much driven towards the large caps. So Brandon, talk about the allocations that we got and why we did what we did.
Yeah, so I mean, again, as Trent mentioned, came off a really good year last year. Again, I always reminder and tell people the market gave us those returns and they might take some of them back or they will at some point, right? So what we have in place to figure out, hey, how's volatility going to look like? Again, we make these changes quarterly, so sometime sooner if we see fit. But again, I think coming off a really good year like that, got a new administration that's in there. We did put we utilized some of our buffers that we have in place. Again, what's that for? Really to protect maybe some of the gains that we had from last year, continuing on to this year. You had mentioned the election. Obviously, we'll see what that administration does. But I mean, again, just added some defense there. Still large caps. We'll still participate when the market's up, but we're all about, hey, how can we protect a little bit if the market does step back a little bit?
Yeah, you mentioned the large caps. The one thing, the reason we really concentrate in that area right now, the uncertainty with interest rates. Yeah. If interest rates go back up, you got to remember these large tech companies and large cap growth companies don't have to worry about the interest rates in general because they have such a great amount of cash on hand anyway. So acquisitions, research and development, they don't have to worry about financing or borrowing that cash. They already have it on hand. So that's another reason that we did what we did.
Yeah, and then looking into obviously the election, big deals about taxes, right? So technically right now, the way the tax plan's proposed, January 1, 2026, all tax rates get adjusted upward. So I think the Trump administration and Congress are really going to focus in on this year to see, what does that tax package get extended? Does it change? Does it change taxation on Social Security? Does it change the corporate tax rate? So these are some things that we're really looking at this year too to see what is the outcome of the tax situation.
We think the extension of the tax rates we got now will happen because of the majority that the Republicans have over in the House, Senate, and also executive side of the equation. So we feel pretty positive that that'll get put in place. Does that mean permanent or does it mean 10 years? Yeah. We just know that it's going to be extended past or we feel good that it's going to be extended past January 1st of 2026, which again is another reason why we've got the large cap in the portfolio. We feel positive about that. If you've got any questions or concerns, feel free to give us a call or email us. Be glad to get back with you and discuss that more in detail. Also join us on social media so we can keep you updated throughout the week. Brandon Rogers, Trent Bradshaw Rogers Financial Partners, and Mind Your Money. Have a great day.
No.
Got a nice smile. All right, here we go. Trent Bradshaw, Brandon Rogers, Bradshaw. Pretty bad, wasn't it?